In our last update, I touched on how much more bullish potential Cardano has than I had realized initially. And with this wave 2 pullback, it has continued to support that perspective. Here on our 1 hour chart, we have only one pattern at the moment. The former aqua blue pattern has been removed, and I've relabeled everything as this purple pattern, which had a 5-wave rally topping off at just about $3.10 on September 2nd. And then we had a very scary spike all the way down into our purple box, which itself almost went down to the 61.8% standard retrace level. Since then, we had a clearly corrective B wave bounce, and we have what I'm calling a final C wave to complete our wave 2 for this overall setup. Cardano is one of those cryptocurrencies that did not break its 61.8% retrace level, which is marked with the red line at 181. You can see that I have written here must hold 181 for the setup to remain valid. And since then, we've had a bit of a slow grinding rally, and this is the case with many of the cryptos, although other cryptos are rallying much more strongly, such as Bitcoin, which is absolutely a good sign because Bitcoin is our biggest crypto and probably the best indicator of overall sentiment. All that being said, this is a good place to buy if you're trying to top off positions. If you need to deploy a lump sum, you want to have a bit more of an allocation for Cardano, this is a good time to do it because we are still very much within this box. If you've been dollar cost averaging, well, you probably didn't feel too much stress because that's the beauty of buying a little bit over time regularly. I would still keep our support at the red line. However, I would really like us to maintain the $1.91 mark, which is marked with this orange line here, which marks the low that we hit at the bottom of what I'm calling the wave C of the wave 2. In our big picture pattern, we can see that our MACD went well below zero and is in the process of being reset at the moment as this wave 2 correction ends. As noted in the previous video, we have a structure that started in March of 2020 with a clear 1, 2, 3, 4 pattern, which hit all of the standard Fibonacci targets very nicely, with our wave 3 hitting the 1.61 extension of the original 1, 2 almost perfectly. And of course, we can clearly see our wave 1 and 2 here on this logarithmic big picture chart. If we can hold support and begin our rally for subwave 3, we are targeting between $9.18 and $12. Those are the standard extensions for our subwave 3. It just so happens that we have two significant resistances that we will have to be mindful of. There's a strong resistance at this 0.32 extension of this larger 3-4 pattern, and that sits right at the 645 mark. So don't be surprised if we bump our heads on that before we clear it to get closer to our standard third wave targets. In addition, the third wave target may also coincide with the 0.5 extension, which is at 1147, right near the top of our standard expectation for the subwave 3. That would be the ideal scenario where we possibly bump our heads on both resistances and then finally consolidate sideways in a subwave 4. After that subwave 4, provided that we hold, our subwave 5 will target between 1416 and 1851, which is marked with this purple box here. This range too coincides with a very strong resistance at the 0.618 extension of our larger 3-4 pattern. This 0.618 extension also has significance because it is a very common fifth wave target in Elliott wave analysis. So there's a lot of confluence here, and it would be very nice if we eventually topped out there. Our subwave 3 should take us to about a 4x return, and the lower end of our ultimate top for subwave 5 would give us a 6.5 plus x return. If we do hit the higher end of the box, which is the 0.61 extension or 2040, that will be a nearly 9.5x return from where we are right at this moment. So as I mentioned, there is nothing currently indicating that our overall big picture pattern is broken. This is actually one of the most robust and strongest patterns we have across all the cryptocurrencies. And as I mentioned in the last video, we also have these logarithmic trend channel lines that can give us a very rough idea of timing on this. And again, this is very approximate. Elliott Waves focus on price levels, not so much timing, but sometimes you get a bit of a hint. And here it's showing our third subwave could top sometime in early December, maybe even earlier than that, maybe mid-November. So what happens after we top in this larger wave 3? Well, if you've been watching my other videos across the other cryptos, I do expect a major top here for Bitcoin and Ethereum, in which they will be hitting their overall fifth wave tops from the past 5-6 years of action. I expect to see a very gut-wrenching crash in those two cryptos as well as others. And in most of the altcoins, we will probably see a pretty scary crash as well, but not quite as extreme because, again, I'm not seeing this as a major fifth wave top as I would for Bitcoin and Ethereum. We have a lot of hurdles to clear before we get to that point. I'll, of course, keep us updated on what you may want to do to secure your profits, lock them in, possibly even reallocate into other asset classes outside of crypto. That is a key element in my book, Always Diversify diversify, not just across cryptos, not just across different purchase dates, but also across different asset classes. If you enjoyed my video, please remember to like and please subscribe if you'd like continued updates on Cardano, as well as various other cryptocurrencies and other asset classes, as well as education. Until next time, thank you for watching. Happy trading.